All right, back in the action once again. It's that time of day again here after all. It's Tuesday evening, November 24th, 2020. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, tuning in for the first time, it's great to have you with me because my job tonight is to help us find the best trade setups for tomorrow, not just any Wednesday, the last full trading session before Thanksgiving on Thursday. I got a jam-packed video in store for you guys tonight. Charts are all prepped up in the background, as you can see. Got the Eminis. We got the oil, and of course, we got the gold on our radar for tomorrow. Boy, speaking of tomorrow, lots of pressure on tomorrow's trading session. Last full session of the week before the holiday weekend comes right around the corner. We got one more day left. Got a bunch of news scheduled for tomorrow, and as you probably saw, a bunch of big moves on the charts for today, which means big pullbacks, big ranges, maybe some breakouts for tomorrow's trading session. I'm going to put the entire plan together for you guys tonight, so we're ready for battle tomorrow. Before we jump in, though, and get our hands dirty on these charts tonight, I just want to make sure to remind you, please make sure you subscribe to our YouTube channel. That way you don't miss all the good stuff we publish every evening on this video newsletter. And don't forget, if you have any questions, drop those questions in the comment section below. I'll get them answered as soon as possible. And as always, if you tune in every evening, if you enjoy this video as much as I enjoy making it for you guys every evening, always appreciate hitting that thumbs up button for me here on this nightly newsletter. So again, make sure you subscribe. We publish this newsletter every evening, Monday through Thursday, with our best trade ideas for the following day. Drop those questions in the comment section below and thumbs up if you guys enjoy the content here on this video tonight. But enough of the introduction. Let's get these charts going. I'm a little bit behind schedule, as you can see. Let's jump into those charts here and get this video newsletter going here. Got the gold, got the crude oil, got the S&P in front of us here. What's going on here? First of all, on the gold is pretty much a bear spike and channel. And a spike and channel pattern tells me exactly where I want to get short. We're bearish on gold into a spike and channel pattern. Spike and channels are very clear. We'll talk about the best entry setups. I'd like to get this thing up and sell us back down here up around that 1812, 1813, 1814 area. There's only one problem, though. We have a rising support trend line in our way. We'll talk about the best way to get short, and possibly, anytime we see a rising support trend line like this, the bears have some trouble in front of them. We may see a reversal. We'll talk about a couple of reversal patterns here to be buying on gold for tomorrow. How about the crude oil? Right smack in the middle. Boy, I'm not sure what oil got into its system today, but oil taking off to the upside. Big move up on the oil all the way up to that 45 big round number. And the key takeaway on oil is a huge move. And that means we've got two potential situations for tomorrow. Anytime I see a big runaway move like we saw, I got two specific setups or two scenarios I want to be ready for tomorrow. We'll grab a look at that chart in more detail here in a moment. And over on the S&P, boy, strong bull run on the S&P today. Pretty much into a trading range. Bull market into a range. I'm thinking failures below the range. I'm thinking breakouts above the range. Will they get that all-time high? There's some all-time highs waiting overhead. Everyone's talking about Dow 30,000 today, right? So will the S&P hit their all-time highs again tomorrow? We'll talk about some breakouts. We'll talk about how to buy the pullbacks. There are three types of pullbacks I watch for on these bull markets right now. So got some great setups we're tracking for tomorrow on the S&P, on the crude oil, on the gold. Before we get our hands dirty on these, though, we got to check the calendar for tomorrow. Courtesy of Econo Day, let's take a look at the calendar here for the rest of the week here. Tomorrow, of course, is the last full day of trading. Markets are closed, of course, on Thursday. Got that early close on Friday, right? So a very short session on Thursday. And I want to say I saw some stuff circulating from some of the brokers. The markets might be open for a couple hours on Thursday, but be very, very careful. From what I was aware of, the markets are closed on Thursday, but sometimes they're open, right, for a couple hours there. Just to allow traders to do business. I did see an update from one of the brokers I follow talking about markets early close on Thursday. I believe the case, though, is on Friday, right? So bottom line is, consider markets closed on Thursday, got a half day on Friday. Be very, very careful, though, right, on that. If the markets are open, right, at all on Thursday. I think they're pretty much closed, though, on Thursday. Friday, the markets will be open, though, on relatively low volume. So you do want to be careful on Friday morning, right? And of course, we'll be off for the rest of the week here, Thursday and Friday, to enjoy the Thanksgiving holiday here, at least in the United States. And if you are celebrating anywhere around the world here, a very happy Thanksgiving. I definitely have a lot to be thankful for this year. Hopefully, right, you enjoy your holiday. Looking at the market tomorrow, though, what don't we have tomorrow, right? The big question for tomorrow is what do we not have on the schedule tomorrow? You'll notice, I can't recall the last time we saw this many news reports piled into one trading session. We got durable goods, GDP, international trade, and jobless claims all coming out at 8:30 Eastern time tomorrow. As you can imagine, it would be a waste of time to try to think about what one individual news report is going to play into this tomorrow. Who knows, right, how the market will respond to this with a peppering of news coming out at 8:30. But I'll tell you one thing, though, by about 8:45, 8:40, 8:45, we should be seeing the dust settle, and we should be getting probably the nice drive for the morning session after all that news comes out at 8:30 Eastern time. So I'll definitely be at my desk early tomorrow looking for not to trade the news, but to trade the reaction, right? 8:40, 8:45 into 9 o'clock. Now, hopefully we'll get a nice move off of that 8:30 block of news before we run into our next block of news, which of course is that 10 o'clock block, new home sales, consumer sentiment, and personal income at 10 a.m. The big news at 10 o'clock is that personal income number, right? And of course, the big news at 8:30 be GDP and the jobs report, the third quarter GDP being the headline number at 8:30 Eastern time. But again, right, it doesn't make a lot of sense to worry about one individual news report because they're all clustered together there. So hopefully tomorrow morning, 8:30 Eastern time, hopefully that will kind of get the engines revving there for us tomorrow morning in our trade room. We'll look for that 8:40 to 10 o'clock move, right? And then at 10 o'clock, big news coming out. We've seen a lot of great moves from 10 o'clock to 11 o'clock. So think about those two blocks of time, right? 8:45 to 9:45, 10 o'clock to 11 o'clock being where you got to make sure you're at your desk tomorrow to get the reaction, right, to those news events. Now, don't forget, tomorrow morning, every morning, Monday through Friday, except, of course, right, Thursday and Friday this week, we'll be off having some turkey and stuffing with family and friends for Thanksgiving. But usually, though, Monday through Friday, tomorrow morning, 8 o'clock Eastern time, we'll join together in our trade room and we'll trade this strategy together. I would love to have you there with me. I'll put all the info you guys need to get registered and come out and join me every morning, Monday through Friday, 8 o'clock Eastern time. I'll put that link for you guys to get registered in the description of this YouTube video. Grab that link, come out and join as a member, and we'll see you tomorrow morning at the opening bell in the trade room. We'll put the plan together tonight, and of course, we'll trade that plan together tomorrow morning at the opening bell. So grab that link in the description of the YouTube video. Don't miss tomorrow. And of course, if I don't see you guys tomorrow in our trade room, enjoy your Thursday and Friday holiday break. Try not to eat too much apple pie. I know that's always my Achilles heel. And of course, we'll see you guys back here for the post Thanksgiving session next week as we go into the end of the month. On the 30th is next Monday, and of course into the month of December. Now, I should also mention too that gold is on our radar for rollover. It might be end of this week, right? Also into next week. So be aware of that if you're a gold trader like we are in our trade room. Keep your eyes on the gold. Right now we are on the 1220 contract. We'll look at that move to the 0221 contract, right? Once that 0221 contract has more volume than the 1220 contract, we'll make that move and we'll roll it over. Right now we have on the gold right now, you'll notice here, we've got quite a bit more volume. If I zoom in on this, quite a bit more volume on that 1220 contract, right? So just keep your eyes on, again, if you're a gold trader, watch out for that rollover. It'll be, again, they're calling for on the 30th of the month, which of course is next Monday, but usually usually rollover is a little bit ahead of what the announced dates are going to be. So keep an eye on that. Once that 221 contract has more volume than the 1220, we'll make the move and we'll start trading the 221 contract here. Maybe it's Friday. Bottom line is look for that for next week on the, again, 221 contract on the gold. All right, we're looking good. So again, grab that link for the trade room tomorrow morning. It's in the description of this YouTube video. And let's keep this party rolling here. Got the E-mini, got the crude, and of course we got the gold here on our radar. Lots to cover tonight. Spike and channel on gold, runaway on crude oil, bull market into a range here on the S&P. Let's grab a look at the E-mini. We'll get this day started here, get this video cranking here right on the E-mini S&P. What do we see right now? What's the key takeaway on the S&P right now? It's clearly a very strong bull market, right? You'll notice here the market went up one leg, right, two leg, and then pretty much went sideways, right, into a range. That is completely expected after a market makes a big move like that, right? You'd expect to see a range. And what is a bull market into a range tell me to do, right? But remember this from last night? We talked about this briefly last night. A bull market that goes into a trading range, there are three basic patterns we look for, right? Remember the first one? Look for a support level below the range and combine that support level with what we call a seller failure pattern. Wait for the price to go lower, wait for bears to get short at the pullback and buy into those stop losses, right? We call those seller failure patterns. And there are two breakout patterns, right? There's a 1, 2, there's a 1, 2, 3 breakout, which again, above the range, pulls back and jumps off the moving average. That, of course, tells us mark up the high, mark up the low by the first test of the low of that channel. There's one more breakout pattern. That is that strong move up. Moving average comes up, shallow pullback, higher high, and of course that, right, that trap low, right? That will be another way to trade that breakout as well. So again, it's the key takeaway right now on the E-mini, bull market into a trading range. I'm looking for a seller failure pattern below the range, a 1, 2, 3 breakout into hidden channel pullback, or a 2 try breakout pattern, right, as we blast above, right, the highs of that trading range, right? You can see a good example of that we saw, right, in the early part of today's trading session. Strong move up, shallow pullback, higher high, trap low, right? That's exactly the setup we're talking about in last night's newsletter, right? So be aware of that. We might see that happen here again because you know what these buyers are hunting for? They're hunting for that all-time high, right? That 3668 area, right? Everyone's talking about Dow 30,000, right? All-time highs getting hit. And of course, that all-time high up there at 3668 is definitely on our radar right now. Now, there's also one more kind of wrinkle that you can see on this chart. I've drawn up another channel here. And so I'm definitely keeping an eye on this as well. This could be seen as a spiking channel, right? Which means you can buy off the low, right, of that channel. And we'll talk about spiking channels more. Spiking channels also tell us to look for that deep, deep pullback down in the base of that channel. We'll talk about spiking channels a little bit more on the gold. Gold is a spiking channel, but for the bear side, right? So bottom line is it may end up completing this spiking channel, and we'll look for buy setups off the lows of the channel, and again at the low or the base, right, of that channel on a deeper pullback. All right, those are the three. Those are kind of the two main components, right? Got my range. And so with this range, let's talk about this range, because the one key kind of the one key theme today and yesterday really were these big moves. And anytime we see these big moves, we always know that we're susceptible to a really deep pullback, right? Buyers are going to want to wait for, right? You know, for example, right? I've got this trend line drawn below that trading range. I always like to use these expanding triangles. If you watch my videos here on YouTube or you joined our free trading course, right, you know I love these expanding triangles. So we know it's a range, right? We know it's a range. I'd love to buy that nice deep pullback, right? Off of that expanding triangle. In fact, if I had it my way tomorrow, that will be the trade that we get here in the trade room tomorrow morning. So let's talk about this, because one very important factor is the size of this pullback. What you want to think about is, again, big, strong move up. We want to buy a pullback, but a lot of times, though, right, those pullbacks are really deep and really sharp. What I want you to think about is three types of pullbacks. One is a shallow pullback. Two is a modest pullback, and three is a really sharp, right, really deep pullback. All right. Now, what you want to think about is the market psychology that goes on with these three types of pullbacks. For example, the kind of the bare minimum right now would be I want to get underneath that swing. Right? So if I can get underneath that swing here, what's my big concern about buying right now? I'm buying relatively high, right? I'm buying towards the high of this range. So what I look for in a shallow pullback is I look for what's called trap entry. I wait for bears to try once, I wait for bears to try twice, and look for a trap entry right from there. So one way to think about this, if it's a shallow pullback, to avoid buying too high, I look for basically a bear trap. Right, we call these two-try trap patterns because bears try once and bears try twice. Now, if we get just a modest pullback, right, get down inside this area, again, I'd like to get us right down off that trend line. At this point now I'm not so concerned about buying too high, and because of that, I can look for your classic seller failure, right, into bullish pullback combination. Right? These are two really reliable patterns. We see a lot of these every week on these charts, right? So seller failure pattern into a bullish pullback on the way back up to retest the high, right? So those are two ways to trade a pullback. One a shallow pullback, one a modest pullback. Again, as I mentioned before though, a lot of times you get these really sharp corrections, right? These really sharp corrections that, they basically buyers take profit or the markets get spooked and the market shoots lower, right? Because everyone's holding on to these long positions, and if it doesn't keep going higher, they may liquidate those positions, and this market really runs lower. Now, if we get that moving average curling over, right, coming down here now, what's the problem? What's the concern now? Momentum. We have all that bear momentum. Anytime we see that much strength in one direction, we expect to see another leg in the same direction. So if it really shoots lower, right, if it really pulls back really sharply here for us, kind of gets underneath that trend line, so to speak, now what you want to do is you want to break out the big guns. Break out we call the nested failure pattern. In other words, let the bears try once, let those bears try twice, and once those bears have tried twice now we know where their stops are, and now we can literally just buy right into those stop losses. Now, I always look for a chance to buy off a trend line, right? Buy into those stop losses. The bottom line, though, is if it really pulls back sharp, you want to think about momentum being concerned now. You want to give those bears, give them two tries, right? One try, two try, and then we can go back up to retest those highs. Now, I should also mention, too, that a lot of times we get these deep pullbacks. You're not going to get that failure into pullback combination, right? It's a seller failure pattern into a bullish pullback combination. A lot of times when you get those really deep pullbacks, the market will just rip higher, right? And you won't be able to get the pullback to the moving average. In that situation, just simply look for that little trap low, right, and get in off that trap. So this will be called a nested failure into a trap entry, target again, back up to retest the high. So again, it's a shallow pullback with a trap to avoid buying too high. It is a modest pullback, which is always kind of my bread and butter, right? A failure into pullback combination, target back to retest the high. Or if we really shoot lower, right? Remember that the problem now is momentum. Let them try once, let them try twice. Once we got that, then we know where stops are. Then we know where pain points are, right? For those sellers, we can buy into stops. And again, keep your eyes open for those traps before we get back up to retest the high, right? So pretty easy plan. And don't forget, I'm just simply drawing on the screen right now. I go into a lot more detail about these patterns inside of our free trading classes. If you haven't done so already, make sure you grab that free course. I'll put a little pop-up there in the upper right-hand corner. Grab the link for the free trading course. Learn my 4 favorite setups. You'll learn all about failures and traps. You'll learn breakouts and reversals. Most importantly, you'll be able to get the most of our time together every evening on this video newsletter. So make sure you grab that link that just popped up there. Grab the trading course, and don't forget, right? Don't forget, you'll find all the important links you guys need, right? The trade room link for tomorrow morning, as well as the free course links to get registered as a free course member, right in the description of this YouTube video. So be aware of that. Now, please don't forget, if we do end up sitting inside this range, right, we don't do anything, right? Stay away from the middle, stay away from the range. What I'm curious about for tomorrow is I'm curious what's going to happen if the market goes higher. See, if it goes higher here, we may end up getting the top of that channel and then a pullback. So I'll be definitely open-minded to buying, right, off of that low. But here's the problem. At this point, we are sitting right at a major top up here. So I'm not really too keen on just simply buying the low of that channel unless I can see one of those 2-try trap patterns. I think that is the go-to pattern if I want to get long off the low of this. The first thing you want to do is make sure they go up. Tag the top of that channel first. That's necessary. We have to get the top of that channel and then pull back. If we can get that pullback off the top of that channel now, right? If we can get off the top of that channel, then pull back now what I can do is I can use that same trap setup, right? Bears try once, bears try twice. And I know this is a little more, this is pretty conservative. It is. But again, my rationale behind this is I'm still at major resistance. And so I really don't want to force that trade up into those major highs. If it wasn't for this area at 36, 37, I'd be a whole lot more open-minded to simply buying the low of that channel. But because of the range, because of that major resistance, I'm gonna play it safe, look for a 2-try trap and get in off the low of that channel that way. Now, as I mentioned earlier, there was always the potential for a 1, 2, 3 breakout, strong move up, right? Mark the high, mark the low, and we're buying the low of that channel, right? Remember, you don't want to buy that first pullback, right? The first pullback is not trustworthy. Make sure they hold that first pullback, then we can grab it, right? Then we can grab it off the low of that new channel. And then don't forget too, the second breakout pattern, which we saw, right, in the overnight last night, was that strong move up, right? That shallow pullback, that higher high in price, and that trap below that low, right? And we don't want to chase the market higher, so wait for that trap. Strong move up, shallow pullback, higher high in price, right? Trap low from there. Where would these breakouts be trying to go? They're trying to go up to that all-time high at 36.68. Last but not least here, how does the market turn bearish? We've talked about how to trade the breakouts higher. We've talked about staying away from the middle, right? Staying away from this range, right? Remember that, right? We're not trading the middle. And we've talked about those deep pullbacks, shallow pullbacks. How does this market reverse? What's a reversal look like? Well, we're so bullish right now that I can't really trade short unless we see momentum confirm. What does a reversal look like in a bull market like this? First of all, it's going to have to start with a strong pullback, right? Get down into these support areas. Then show me how much you really want this, bears. Well, more importantly, show me the buyers have walked away. And you'll know that because the bears will have no problem jumping off that moving average, right? We call these 1, 2, 3 reversal patterns. It's a relatively strong move down. It doesn't need to be that strong, to be honest with you. What does need to be strong, though, is the jump off the moving average, right? If they can get that jump off the EMA, now mark up that low, mark up that high, right? And we're looking at short off the high of that new hidden channel. Remember, first test is always the best test. 1, 2, 3 reversal into hidden channel pullback. Where do we think the bears want to go? I would guess they're going to go back to that 3,600. There's a range down there. That is always a magnet. If you go even further down the line here, right, we go back into that range from yesterday, right? So 35.70, 35.60, and if it really hits the fan here, right, 35.42, 35.43 down at those lows there. But again, a reasonable target though for the bears tomorrow is easily down into that 3,600 and change, that trading range, which will always act as a price magnet. So S&P, I like what I'm seeing on the S&P, but I got to get a pullback here right now, or just go sideways here, right? Remember, you can easily go sideways here for us, and then give us that breakdown, that seller failure. We can buy it back up. We're waiting to see what we get here in the overnight. S&P, you're looking good. How about some oil, right? How about some oil here? So oil, what's the key takeaway on oil? And boy, I'll tell you, from last night's newsletter, it was looking pretty bearish last night. We finished the session yesterday, but they did not waste any valuable time today, did they? Wow, what a breakout and a run higher. This is a great example of why you don't care about the why, right? There really wasn't much rationale behind this oil, right? Because even the inventory report came out today with a huge build, right, in inventory. So not a lot of explanation behind this. I'm sure somebody can help explain it to me in the comments section below. But as you can see here, market takes off like a rocket ship. Now, I would say, just from looking at the chart right now, this market is obviously bullish, but you'll notice the measured moves I drew in here. The market just kept going and just never looked back. So whenever I see a market that kind of quote unquote goes too far, I say in quotes, went too far, keep in mind, we don't have the ability to tell the market when to stop going higher, right? So in my vocabulary, I try not to say the word overbought, oversold, right, or gone too far. But this is one of those times where the market went so far that you have to think we're going to either go sideways tomorrow or we'll get some deep pullback. So what you want to think about here is do we go sideways? And you kind of see I'm doing my best to kind of find that range there, right? It's not very clear yet. And again, we'll have to kind of wait and see what happens here. If it goes sideways, though, we get a pretty good plan, right, for a bull market into a trading range. We talked about that a few moments ago. And if it pulls back, right, nice and deep, usually when you get these deep pullbacks, what you want to look for are those nested failure patterns, right? Nested failures are usually the go-to entry pattern when you've got one of these markets that just wouldn't stop going higher here today. So those are the two main components here for it. So first of all, let's just plan on the range here first. If the market does, we're obviously bullish in this trading range. If this is my trading range, my goal is to find support levels below the range. In fact, you could easily copy that up, right, and put that below it. And the problem right now is we don't exactly know how far, we don't exactly know how big this range is. So if I double up that trading range and bring it down real quickly here, that'll give you kind of an idea of where to be looking for it. What I'd like to do is I'd like to get definitely underneath this low at 44.60. That'd be a key support level for us. If it is a trading range, if I can zoom a bit closer here, and again, we'll know more about this once we get a little more candlesticks here, right? So let's say we do end up confirming it is a range here. It might be a bit smaller, it might be a bit larger. It's tough to tell exactly where the range is right now. But if we do start going sideways here in that trading range, I want to get long off a level of support. I want to combine that area with a seller failure pattern. And remember, failure pattern into pullback, right, combination for a retest of those highs, right? So if we do end up going sideways here, just below that 44.60 area, that support swing, right, as we go. That is one setup to keep an eye on. And of course, you can also keep an eye, right, again, if it does go sideways here, we can think about that breakout, right? That 1, 2, 3 breakout, mark the high, mark the low, find that first test right off the low there. We can also look for that 2-try breakout, strong move up, shallow pullback, higher high in price, right? And of course that trap below that low, right? Does that make sense, right? So nothing different there. Again, if it goes sideways, looking for seller failure patterns, right? As I mentioned before, failure patterns below the range, right? Or those 2 breakout patterns up above the trading range, right? So we're definitely watching for that trading range here tomorrow. That is probably the most likely scenario, considering with all that news coming tomorrow, and tomorrow's a Wednesday with an inventory report at about 11 o'clock Eastern time tomorrow morning. Now, what I'd like to get here tomorrow is get that deep pullback. Right? That would be probably the best possible scenario, is to get that deep pullback, give us a nice risk reward ratio on this trade. Now you'll notice I've got this 44.36 level. This is a prior swing high. Oh, sorry, I guess we're not. There isn't much data that I need there. But the bottom line, there's 44.36. If you look at like a 4-hour chart, you'll see that level there. It's a prior swing high. And if I had to choose my entry level tomorrow, that would probably be the best place to do it. The challenge, of course, is that is one hell of a pullback, right? If we get all the way down to that area, that is a very, very deep pullback. I hope that's what we get. If we get that deep pullback, though, what's the concern now? The concern is momentum, right? All of that bearish momentum now. And what is the best way to buy when I'm concerned about bear momentum? I realize it's a bull market still, but how do we get long safely? We want to give the bears the benefit of the doubt. Let them try once, let them try twice, and then we know everybody's committed. We know right where stops are, right? We know right where the pain points are, right? We know right where those bears go, get me out of this thing, right? We know right where bears get in trouble, and we can buy into those stop losses. Now remember, if we do get that really deep pullback and the bears try once and the bears try twice, if you tip that boat over, right, and all the bears fall out, the market oftentimes just races and runs higher. Call it a short squeeze, call it a short covering rally, whatever you want to call it, right? That squeeze, right, as those sellers get forced to buy their way out, the market slams higher. We oftentimes do not get that pullback we want, right? That entry off the moving average. In that situation, look for those trap patterns. Remember, you don't want to buy too high, right? As the market races higher, you don't want to buy too high. What's the remedy to avoid buying high? Traps. Right? Bear traps, trap low before we go back up to retest the high. So again, it's a nested, right? A nested failure pattern into a trap entry as we go back up to retest those highs. And again, trap patterns, failure patterns, I talk a lot about those in that free course. You can grab that link, a little info link up there in the upper right-hand corner. So those are the 2 types of pullbacks I'm looking forward to here tomorrow. Will it be a range, or will it be a deep pullback here? Now, could this thing keep going higher? Of course it can, right? It can do whatever it wants to do. Where's the next objective? 4603. 4603 is the highest part of the post-lockdown collapse. So there's a big, right? We talk about the all-time highs on the S&P for tomorrow. This might as well be the all-time highs for crude oil. Huge psychological level, because that 4603, remember that there was that big gap from 4603 down to up to 50, I think it was. Was it 50? Where is it? It's up here somewhere. Yeah, 50 3/4, 50.73, right? That was the gap when we had that, right? The big pandemic lockdown, right? Pandemic hits, lockdowns get issued. The market gaps all the way down to that 4603. That's a huge psychological level. I would imagine that's where buyers would love to get to. How do we get there right now, though? I do not want to buy aggressively here because we've gone so far. And as you can see, it looks like there could also be a bit of a bull flag, right, going on right now. So I do not want to try to buy just to get long right now. What are some patterns to look for? You know me, a 1, 2, 3 breakout is always my bread and butter. It's the easiest one to trade. It's the most reliable by a long shot. So 1, 2, 3, right? 1, 2, 3 runs higher. I'm going to mark up that high. high. I'm going to mark up that low, and of course, looking to be a buyer right off the low of that hidden channel, right? That will be that's probably the most reliable way to buy this thing as it goes higher. And of course, don't forget, sometimes we get lucky and we get that really strong jump up, that shallow pullback, right? That higher high in price, and watch that trap. These are always great setups as well as we go higher here, right? Strong move up, shallow pullback, higher high, right? And that two-try trap. And I know I'm repeating myself a lot on this stuff, but there's a lot of ranges right now. And, that's what trading is. Trading is applying the same thing over and over again, expecting that statistical reliability, right? We're not trying to reinvent the wheel every single day, right? If you want variety, go to the mall, right? If you want consistency, right, become a trader. Trading is all about repetition over and over again, exploiting, right, the best opportunities that we see here. So looking for a potential breakout, right, running higher here to maybe tag that 4603 area as we go. And then I'm sure you're wondering right now, how do I short this market right now? We're way too bullish and we're not quite at a turning point here. I could get short on a market like the S&P because I'm right at the top of that move. We're kind of in the middle of nowhere right now. So getting short right now, I'm going to really want to wait and see a reversal pattern, right? Get that strong move down. Remember, with that strong move down, though, I will be looking for bears trying once, bears trying twice, and buying it back up again with that nested failure into trap combination, right? Nested failure into a bull trap combination. That would be an easy way to get long there. But what if they hold it, right? What if those bears can hold that pullback and jump off the moving average? Wonderful. That becomes a 1, 2, 3 reversal. Mark up that low, mark up that high, and of course, looking for that first test off the high of that channel. And sometimes the market just simply collapses. Right? It just collapses, right? We saw the market jumping higher in the pre-market last night. If the market just collapses and runs lower like this, right? Collapses, you get that shallow pullback, that lower low. Watch that trap. Right? Watch that trap. That's where the best entry will be as the market collapses and runs lower. Either a 1, 2, 3 reversal or a 2-try trap here. Those are some great setups as the market goes lower. But as you can see, though, way too bullish right now. Try to call a top on this market. And again, we're not at any major turning point. Right? At least on the S&P. You know what I mean? Go back to the S&P here. The S&P is at least at a major turning point, right? If I really wanted to try to dip my toe in the water for the sell side on the S&P, I could look for what's called a crown reversal, right? Buyers try once, buyers try twice, and I can try to pick that top up here. I do think that is a bit aggressive right now, or else I would have mentioned it earlier, just because I think those buyers can smell that 36.68 up there. So, but that's a good example, though, where the S&P is at a major turning point. So you can definitely try to pick those tops. Again, I don't think this is the environment to be doing that right now, but that will be a situation where if the oil, right, if we did have that, again, if we did have some sort of top up here, right, I would consider that, but at this point, we're either going to pull back nice and deep off support, right? Or we'll keep this party going to that 4603 level for tomorrow. Bears would love to go back down, right, in this area here. I would imagine that 4360, 4350 is a range down there. You can see, I would imagine that is probably going to be an easy magnet here for those bears if they can get control of this market tomorrow. So relatively straightforward plan on the oil. It's all about deep pullbacks, using nested failure patterns to absorb that momentum. All right, we're looking good. Shall we wrap things up here on the gold? Now, gold might be the most difficult for tomorrow, right? Honestly, gold might be the easiest too because of a potential reversal here on this yellow metal. I say that because of this rising support trend line here. So, looking at the gold here right now, what's the key takeaway here on gold? Well, you can definitely see we're bearish. And from my point of view, what it looks like the market went into a spike in channel or kind of a wedge, right? Like that, had that big bear move down, right? There's your wedge right there. And so they pull back and they retest, right, that wedge. Classic wedge, right? The point of the wedge becomes a major area of support. Now, whenever we see a wedge, you can kind of trade a wedge just like a spike and channel pattern where you make that run lower and it creates this channel. Now, what you want to think about when you have a spike and channel pattern, spike and channel patterns are very consistent in the way in which they pull back. They love to pull back to the base of this channel, right? The base of this channel is 9 times out of 10. That's where you'll find, right, the most sellers coming in, right, to sell it back down again. So classic spike and channel pattern says find the base of that channel. In other words, find where that channel intersects with that spike down, right? So it's basically a bearish wedge. I'll trade it like a bearish spike and channel. I want to sell the base of that channel. The challenge, as you can see, is we have a rising support trend line. And that rising support trend line creates a problem because as we go higher now, what's my concern? My concern is I don't want to sell into that rising support trend line. This is one of the biggest reasons why I think a reversal might definitely be something we want to keep on our radar for tomorrow. So we're definitely bearish right now. That is for sure. But hey, with these environments where we see these higher lows like this, oftentimes what will happen is the bears will try once, the bears will try twice, and it will jump right off of that trend line. Tough to call the reversal that early. That would be kind of the earliest way, right? You could be a buyer off of that trend line. What I always look for, of course, is a more reliable reversal rather than simply trying to pick that bottom like that. I always wait for, right, that 1, 2, 3 reversal pattern. Get that momentum going. So much more reliable that way. Once you've got momentum going, mark that high, right, mark that low. It's the first test, right, off the low of that channel. This would be a great, this would literally be a great setup. Again, if we can get that, if I can get this thing to, right, up, back, and go, right, really jump off that moving or jump off that trend line, if you will. That'll be a 1, 2, 3 reversal. You can try to pick the entry off of that low, but it's just, it's not the most reliable thing you can look for. My job tonight is to make sure we give us the most reliable, most dependable setups here for tomorrow, right? That's probably a 60% winner in my experience. You know, good for a more experienced trader, right? I'd much rather have my new traders out there wait for that reversal, find that new channel, right? This is more of a 75, 80% winner, right, off of the low of that channel. And I get it. We all want to get in the beginning of the move, right? Remember, there's no first prize, there's no prize, there's no trophy, there's no ribbon, right, for being the first one into the market, right? All that matters at the end of the day or the week or the month is that you're in the green, or that you're getting, or that you're improving, right? You may not be in the green yet, but as long as you are improving every week, getting less in the red, getting your winning percentages higher, that in my book, right, is a win. So we want to focus on the most reliable setups, especially for all the new traders. But those are two spots here. Again, imagine now we go up, right? We pull back, buying off that trend line. That's a lower probability trade. I'd much rather have it 1, 2, 3 reversal, right, and get long off that low from there, right? That would be a pretty nice setup here for the buy side. And as you can imagine, right, the buyers have a lot of open space above us here at that 1829 and that 1836 and change there. So that takes care of, right, the long side here for us. How do we get short on this market? The most important problem, or the biggest problem we have is this rising support trend line. So as we go higher here, what's the most reliable way if we do go up into this resistance area? How do I get short? Because now momentum is turning. That support trend line is in my way. What's the best pattern to avoid selling into support or selling low? It'll be a nested trap, right? It'll be a 2-try trap. 1, 2, and a trap high. That's going to be your best bet, right, as the market pokes its head into that sell zone, right, up overhead. Same thing if it runs higher here, right? Runs higher here like this. 1, 2, let those buyers try twice, and again, that trap above the high to A, avoid that trend line, and B, absorb this bullish momentum here. I like that pattern setup. We'll see if we can get that thing to trigger as we go. Another thing to keep in mind here for tomorrow is if we straight go sideways, right? So if we just straight go sideways here, they can really they can get rid of this trend line really quickly here if they go sideways on this right now. Now, if they go sideways on us, that trend line now disappears, right? So that trend line may disappear if this market goes sideways. Now, if it goes sideways, what do we do in a bear market like this? In a bear market into a trading range, there are three basic patterns, right? We find a level of resistance above. We combine that resistance with what? With in this case, a buyer failure pattern, right? To sell above the high. So that, of course, is a failure pattern above the high of a bear range. We've talked about bull ranges a lot today and yesterday, right? This would be a bear range. Or it's that 1, 2, 3 breakdown, mark that low, mark that high, sell off the high of that channel, right? So it's the same basic idea, except it's just to the downside, right? So if we do go sideways, we take out that trend line, we jump up into resistance. Buyers try to buy the pullback. If they're successful, the market reverses into a 1, 2, 3 reversal. Mark that high, mark that low. First test is the best test, right? Same idea as we talked about already quite a bit here. But again, assume the buyers, though, try to buy it. They fail. That is a buyer failure pattern. Or it runs lower. Strong move down. Shallow pullback. Strong move down, pull back to the moving average, jump off the moving average. What do we call those? 1, 2, 3 breakouts. Mark the low, mark the high, find that short off the high, right? The first test is the best test, or maybe it's that real strong move down, that shallow pullback, that lower low in price, right? And that trap above the high, right? It's the same basic patterns, right? A failure pattern above the high, and of course, 2 try breakout, 1, 2, 3 breakout pattern as we're going lower here. So we'll definitely keep an eye on this if it does, right? If it does go sideways. So, and that goes too if the market rolls lower, right? If we roll lower right now, 1, 2, 3 breakdown, no problems there either. Right? Mark that low, mark that high. Again, I'm not going to chase it going lower. I'm definitely not going to sell that first pullback going lower because of where we are, right? But I'll gladly sell that next one if we can get that 1, 2, 3 rolling lower, right? If those bears can give it a good shot off the moving average there, that next pullback is highly desirable, right, for those bears. So hopefully that kind of fills in some of the gaps here, so to speak, on the gold. Now, keep in mind, there is a ton of open space below us on the gold. The next big support level is all the way at 1720. So huge move potential on the gold. Probably not going to see 1720 tomorrow. Maybe, probably not though. Not 2 big days down like this. But I'll tell you right now though, it's definitely something the sellers can shoot for as this market tries to go lower. Will we get the reversal though? Right? Again, the reversal is a very exciting part of this gold because of this rising support trend line. So I'll definitely be keeping my eyes open for the reversal here tomorrow. We know the buyers have a lot of open space if they can get it. The biggest challenge tomorrow, again, is going to be if the market does poke its head higher, 1 try, 2 try with that trap. Right? 1 try, 2 try with that trap. Look for that short above those highs. Every once in a while, we'll see something like this where it'll go up, it'll bounce, go through, and then come back on the other side. That is going to require some nuance to it. So we'll have to kind of see what it looks like at that point. Is it a range? And so we'll kind of fill in those gaps tomorrow morning in our trade room because, of course, unfortunately, I can't cover everything right in this video newsletter. But hopefully you guys have a good plan for tomorrow. Tomorrow morning in the trade room, 8 o'clock Eastern time, last full session of the week. I hope I will see you there right along with us. Don't forget, getting registered is very, very easy. I'll put all the information you guys need in the description of this YouTube video, or if you're on the blog at sidewaysmarkets.com, just scroll right down. There's a big button for you there to join the trade room tomorrow morning at the opening bell. Don't be afraid to call the office if you have any questions, and don't be afraid to use that live support chat on the left, on the right, And as always, I appreciate each and every one of you guys tuning in. Thank you so much for subscribing. Thank you for telling a friend about our YouTube channel, hitting that thumbs up button and posting those comments if you got any questions in the comment section below. But that's it for me now. I can smell the turkey from here. I can smell it already. Got one more day left tomorrow. Hopefully I'll see you guys tomorrow for some appetizers right ahead of the holiday weekend. If I don't see you guys tomorrow morning though, make sure you have a great Thanksgiving. A very happy Thanksgiving to you and yours. Have a wonderful and safe holiday. Come back on Monday and come out and see us on the next edition of our nightly newsletter. Have a safe, restful weekend. A lot to be thankful this time of the year, isn't there? Love the holiday season. But that's it for me, guys. My name is Joseph. As always, be well out there. Be nice to each other, will you? And be thankful this holiday weekend. And we'll see you guys next time. Adios, amigos. Bye-bye for now.